I forget the screen name of who asked to go over the short on Friday that I took. I posted the screenshots in the chat. So I'll just start off with the Friday levels highlighted. So again, just a brief overview of daily levels is that it kind of looks like a lot, right? All these lines. Price becomes very reactionary around previous same day levels. Okay. And kind of the most important levels, you can still get reactions from like 50% of like the candle body mean threshold. So this is still kind of like an ICT concept based uh, theory that I used and derived from like in between the lines of his teachings, where he would always talking about previous highs and lows and opens and the mean threshold and the CE of wicks and all that stuff um, were things to look out for. So then I took it to, well, I started noticing that each day would reference previous same day levels as to um, use for that day's price action and how it kind of like moves up and down through it. So in the time I back tested, which is about a year for the 4 hour and the daily, because I didn't want to come out publicly with it and like not have a decent amount of back testing where I could like show examples every single day and then also use it in my trading and show that. Um, I would see price react from these levels. Okay, so if I have these marked out, like Friday opens up down here, and I mark out some levels where I have, Friday low, Friday high, Friday open, this big Friday candle, this mean threshold, okay, or the 50% of the candle body, Friday low, Friday low, Friday high. Okay, that's what I kind of have marked out. And you can mark out more things too if you want extra levels for where price might react from. And then if we take those, Friday fair value gap, so notice how this Friday is the day that creates the fair value gap, okay? And we can kind of see that this kind of almost drives up perfectly to the center of that. So then if we go to a lower time frame, okay, we're on the 1 minute here. And if we just go all the way back to when price opens, we got price opens right here, okay? And we can see that like price is kind of becoming very reactionary, and we can see where it's tagging and where it doesn't tag. And if we're looking at the Friday level, okay, this first level that price kind of moves down to after what? Running a high, right? Is the mean threshold of the large Friday candle. Okay, and it's just kind of gathering orders around there. Notice how it hasn't touched Friday opening price. And that evening we kind of talked about, and you can see price kind of bouncing off this level, bouncing, bouncing. And then you notice that price kind of starts changing its behavior where it's holding above this level. And now it's breaking down and it's moving in between these two Friday levels. Okay. And as we see this breakdown, the initial reaction you get off of an opening price is that it wicks up hard, comes up, but there's no follow through. There's no, um, yes, Anya, I'm recording this whole thing. You guys are, yeah, anyone who's not here for the full thing, it's going to be recorded. So you guys are all good on that end of things. So as we start to look at price action, what do we talk about when we talk about any major level? We talk about how it reacts off that major level, right? So there's some sort of timing in place, whether there's a macro, there's a 4 hour level, maybe a 1 hour level, maybe a daily level, and we see how price reacts around that level. Okay, well, this is the same thing when we talk about how are we using it. Well, initially, the first time price on Friday touches a Friday open, it kind of gives this um, reaction as if it's really bouncing off that level. However, what do we see? We see candle bodies kind of holding at the Friday mean threshold, and we have no follow through, right? Nothing where price is driving up here to rebalance this area back here. It just kind of wicks and then dies again. And then you can see how price comes up and touches it with this wick, and then price is failing to close back above this level. And then what is it doing here? It's reacting, okay? But again, we have zero follow through, right? So if I'm looking at this piece of price action right here, okay, and if this hasn't happened, which we were talking about this piece that night, and I said if this fair value gap, if we don't show a reaction where we continue and start holding above the mean threshold, I'm expecting this to get filled in. And what happens? We don't hold above it and it gets filled in, and we watch that play out live as we were talking through price action. Okay. And so it continues, and then now we have price drive through Friday open. And now look what it does. It's wicking the bottom of it. And now price is being held underneath Friday open. Okay. So when I talk about how can we trade these levels, well, if we back test and we look at how price reacts and we look at follow through and we look at structure, we could probably say that, you know what, um, Friday's opening, we kind of have this level ran, drives down, comes back up, fails to drive through this and continue higher, has a big sell off, and now we're just kind of consolidating, then we start driving lower. Okay. I might start taking shorts at this right here, or I might wait and say, you know what, I really want to see how it reacts around Friday opening price because I know opening price for things is a big deal. And then once it drives through, then these previous lows are now used for keeping price held. And you can see how it reacts around the level like we just talked about. So then maybe I get short right here. Okay, and then again, how does price react with its ranges? All right. Okay, we have a range, 50% drives lower. That's a really good sign. Okay. So that's a really good sign. If we're adding here, we can add here. Now we get price that comes up and runs this high. Okay, that's all right. We can mark out like 1 minute order blocks like we talked about the other night. If we have a signature in price where here's a tiny fair value gap right here. And I'm just going to mark this red as a bearish order block. Okay, in line with price moving lower. There's something that it wants. And we don't get any candle bodies through here, but we do get a wick, which is fine. But then this candle closes well below this candle. All right. We have a nice up close candle that creates the wick. This doesn't create the wick. So this is looking good for the probability of it being an order block within the flow of price moving towards a certain target. Okay. We've started our short up here, get a couple chances to get orders. We can add, and we can add here. Notice that they left this wick list. They kind of almost come up and touch it, but they don't. It almost fills in this really slight imbalance. Does it get it? Nope, even doesn't even get that tiny imbalance right there. Okay, but holding 50%, right? Candle bodies are closing right at the low of it. So basically what happened was is this balanced part of this range, and we talked about that, how price wants to rebalance. And if I mark out where price hasn't rebalanced, Okay. It needs green up close candles. Well, this is my space, right? Green candle to green candle. This has no green candles. This is still all down close candles. Draw it out over time. And what do we get? So that was just price rebalancing an area that it left a couple equal highs, and that was it. But we're still, the actual structure is still holding, so that price action looks good. We get that failure to like drive through here and close above this, and then we get the sell off again. So just helping you guys like when you do this stuff, again, just your own back testing and looking at price action, mark stuff out and look at what price is actually doing. So that way when it's live, you can tell yourself that like, oh, okay, or you can mark things out or say, oh, I don't need to be afraid because I can put my stops right here and that's a safe spot. And if you get stopped out right here, that's probably going to be that this price leg or wherever this place was an area where price wants to really reject from. And it could mean that it's going to drive higher. It could mean it wants to come all the way back here and like rebalance some of this. We don't know, but if the probability of this being used as an order block is good, then our stop should be safe right here. And if it doesn't, that's fine, right? Then you don't want to you don't want to look to like run the possibility of like, oh, well maybe this is going to happen. Just use probabilities to your advantage. You can always re-enter. Price drives down. Okay. We get to a Friday low, and at this next Friday level, we start having a lot of uh, just price rebalancing itself and engineering liquidity. Okay. And where did price drive down to? We have to go on a little bit of a higher time frame. We could do that, but we will notice that it took out this Tuesday low. Okay. And we'll just mark that as a reference point, just so we can see how price reacts around this area. Okay, so this is a 4-hour and a daily low. Back to the 1 minute in this fair value gap. Okay, remember that evening we talked about as well that if price uses an area as a launch pad, and it's done it in the past, then we would like to assume that it's going to use it again. The market loves to do things in threes. And so when we start looking at will that same area fail, I start questioning it when it's used it 3 times and it hasn't moved away to the next area. Okay. And let's look at a good example of that. This Friday level right here. Okay. 1, 2, 3, and there's been no reaction where we're driving back up through this area of price. Okay, it doesn't touch. And then what happens on the fourth one? Boom, 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 failure. This level fails. Okay. 1, 2, 3, not the reaction we're looking for. So if I was going long right here, okay, which is okay, and I get this and I'm adding, and I'm like, man, let's tap this 3 times and this one comes down here, I'm going to be very, very hesitant to feel good about a long coming off of this. because it had plenty of chances to um, tap it and drive up. Okay. Our big new week opening gap had how many times in there? One and now two. Okay. Look at the daily fair value gap. One, two, three. And no reciprocal massive drive down. Okay. So what do we know when we have a big level like this that's a fair value gap and price wants to continue moving down? One of these days should have had a pretty big continuation. And they can drag it out. Maybe they do tag it 3 times where they're just kind of running liquidity from the day before. But then if this was going to be used to actual hold price below it, no candle bodies are getting in here, then Friday really should have been a huge down day. We should have got more continuation down here and not this massive rejection and then drive up and close into here for a fourth time. Okay, so pay attention to a series of 3 moves. What should it do by that third move? And this will help you because sometimes they like to stay in an area and they make the move on the third time. Okay. And so we kind of have that same thing right here where we get a series of 3 moves. We dive into this new week opening gap. We run it. We run it. We run it. At the Tuesday low, we just barely missed the Friday high, which is fine. And then we see this reaction. Okay. So 1, 2, 3, we see this reaction, gathers more orders, and now we're driving up and out of this new week opening gap. Okay. What is price still doing? It's still using this Friday low. Notice how you get big reactions off these levels. Okay. You're going to get fake outs. Draw out structure on these areas so that you have confidence in where price is going, previous day low, not previous day, but a day of the week, the Tuesday low. Okay, so a daily low that hasn't been ran inside this volume imbalance. Okay, it drives in, but we get this massive green candle up. Initially, this looks like it could be a change in the state of delivery if we were to just look at these 2 candles down and this one massively drives up. But the fair value gap holds. It was a retracement of this range to 50% and then drives lower. Okay. Reaction off of Friday low, lower. Can't get to it, lower. Now the top of this is kind of holding. Okay. Now it's holding price above it. Again, initial reaction of this level holding price below it, Friday low. Okay, just rebalancing this area. Price comes up, and now you'll see this a lot too. This is where you do not want to trade. Okay. Unless you are already in a position where you know where price is going to go, like you're in longs and maybe you want to add, um, you don't want to trade this because you can see price driving kind of around it, right? So if I take a gam box and I just draw this, look at the highs and lows of the range and look at the Friday low level. What is it doing? it's playing both sides. Okay. So you need to be careful trading around this and getting thrown off sides and thinking that, oh, I come into the market and I'm looking at this and like, oh, look, it wants to hold. I'm going long right here. Oh, shoot, it's holding under here. Okay, I'm going short. Oh, crap, it's, you know what I mean? See how you can get caught on both sides? So just be careful of that. Eventually, the consolidation finishes. Price gets one more touch down here. Looks like it tags a fair value gap right here. And then boom, we're off and we're out of the range. Okay, Friday levels again. Right back to Friday open. Okay, candle body's holding. Kind of a fake out, right? Like, oh, it's going to hold price below it. Okay, another consolidation area. So again, let's take ranges and let's look at the range. We have a low, we have a high, we have consolidation. What is price doing at the 50% level of this range? Oh, good, 50% is holding it. Okay, I feel good about the longs or maybe adding to some longs right here. Depending on time of day, we're getting close to New York Open. So if we're in a long from down here, we might want to see if we get some kind of like bigger manipulation lower, like into like a fair value gap down here, just to run like all this liquidity. All right. Um, okay, both these levels right here. Now price is being held up above Friday open. Okay, dancing between them, dancing between them. Kind of a deeper dive. Where does this go? Doesn't run the lows, but just kind of like balances this little imbalance. Okay, all these little areas like this where price has small gaps up, they're imbalances. That is what it is. Price will target them. Okay. I've had I've had stops at candle bodies and price will come down and target this very tiny imbalance. See that? So price closed here and it gapped up here. Right? Still an imbalance. This is an imbalance. It's probably why price came back down here to fill this tiny little imbalance. All right, price will do that. So, and you can see, look at what that wick did. So if your stop was at the candle body low, you get stopped out on this. All right, so we see one more drive down to rebalance, and then price drives up. And here we get to some further Friday levels. Okay. So I'll tell you this is the trade that I took to go short. Is I had this previous Friday low. I was still kind of hoping to see if we were gonna kind of have this be the manipulation, then drive back down even further. Um, but I wasn't confident in that. So really, I was targeting all these equal lows down here. Okay, and we'll get to that um, after we finish talking about the trade. So here's the trade that I took. We have price drive up. Okay, initially, what is that? I think this is a previous Friday high. I used one of these, so it's off the chart. Let's see. Yeah, Friday high. Okay. Let's just move that guy right over here. All right, so we have this level. Friday high kind of rejects it first, then it drives through. Uh, this is something to note. We get really close to this Friday fair value gap, but we don't touch it. Okay. We drive above Friday low. Okay, so picture back in time, we have a Friday that's creating a low right here, and we tap into it, and we get this really nice rejection where we drive above it, and we get two candles that really close below these two candles. Okay, so I was thinking that we were gonna reject this, and I was looking for shorts, and so I ended up taking like 5 up here and then adding another 2. I just put a limit right here on this opening candle and got tagged with this. Okay, and again, if we mark out ranges, high to low, we can see price really reacting off that 50% level. Drives up just a little bit, run these equal highs, get into this order block, 1 minute order block, and then we get a nice move down. Okay, and then I'm just watching price. Um, Again, this was just an eval, and so I was only looking for a certain amount of price or a certain amount of profit for it. And so had it been a funded, I would have added here as well. Okay, mark out the range. We want to see price really reject 50%. That means it's in a hurry to get to its destination. And we can see that, and then it drives here, and then we get this move up. Okay, so looking at the 1 minute, we have some green up close candles setting lows. And remember, I talked about that typically these will get ran because it's not a true low, right? Like highs, we want to see up close candle create the high. That just means, and this is all fractal, right? So that just means that this 1 minute candle, this high is going to be respected until the objective is met. Okay, this was the objective. And we can see this is a nice market maker sell model. Okay. Here's where my mistake was. I did not check other time frames. Okay, so if we go to the 5 minute time frame, oh, okay. I I was gonna make too much money for the eval. So in a funded, when you don't, it, it was an eval I was trading on this trade because I was just working an eval to get it to funded. And so this adding more contracts would have just put me to a point where I was way past 50%. I was actually even the take profit down here was going to put me like $900 past the 50% mark. So actually kind of got lucky that it didn't hit my take profit. Um, but again, here was my mistake with the take profit area. Why add right here? Well, because on a funded, okay, on a funded, right, entry, add, and again, 50% mark, I'm adding. And I talked about this the other night. When you have here's your entry. If I add down here, it splits the difference if I'm using the same amount of contracts. Okay, so my where the level of where my entry is at now comes down here. So then part of this is going to be putting me back into a negative. If I add right here, okay, because I want to see it touch this candle again, now it just goes from here to here. Then price really drives away. Okay, now price is really far away from my entry again. If I wait for 50% versus adding down here, if I now move from here to here and I add down here, well, then now it's going to drop me down here. So again, I'm coming back to a break even point on my trade. If I add here, when my entry is now moved to up here, it's another halfway. So now it comes to here. So I'm never, when you wait for the 50%, you're maximizing where your ads are because you're getting it at the highest retracement point. So it's going to not move it as deep. If you're adding when it's at the lowest part of the range, You're going to get a deeper move on your entry line. You don't want that, because what happens if you come back here and now you've added, let's say you have 20 contracts on and it's wicking that and it's break even. Are you going to get nervous? Are you going to close that trade? Are you going to move your stop to break even and get stopped out? Versus adding at the 50% levels, it's going to move it to it's going to keep it to a much higher entry level spot, and you're still going to be in profit the whole time. Yeah, why wouldn't you? You're not averaging up just anywhere on the chart. You're averaging up in a strategic manner that's always going to keep your entry point above where this would retrace to possibly. And it allows you to feel more comfortable in the trade. And it allows you to catch these big moves and really add into them. Okay, and you just got to practice it. So that's what I did. I added here, and because I started here and I added here, my entry was like right here, just moved down to like right here. Okay, and as I see these ranges being created, I throw a gam box on there and I see how does price react at the 50% level. Okay, once it taps this 50% level and drives out of the range, guess where my stop went to? Boom. Was I worried about this? Nope. This is just coming up to rebalance. If it was to drive through here, then guess what? It probably met its objective, which was this fair value gap, and it's going higher. So then that's fine. You, you can't be afraid of where you move your stop to, because price is going to do what it's going to do, right? Like, we put stops because if price is going to do what I think it's going to do, if it's going to drive down to this area, then it shouldn't be retracing above this high that it put in. If it is, then guess what? It might have met its objective, and now I could be on the wrong side of the trade. And that's why we place our stops where we place them. Okay, so it goes down here, and then my mistake was thinking that we were going to run all these equal lows. I'm looking at these green candles like, oh yeah, those look really beautiful to get ran. There's a fair value gap on the 5-minute. However, I did not check the 5-minute carefully enough. And guess what? On the 1-minute, this looks like it's green up close candles. Well, shoot, on the 5-minute, they're all down close candles. And what does price run? It just runs the wick of the green up close candle. It does not run the down close candle wick. Okay. My mistake for not checking that and moving my take profit to right here to be safe. Because does it matter if I lose this much on a trade? No. And I think JD talks about why he takes profit at candle bodies, to make sure that his profit gets grabbed. Okay. So price runs this green candle wick. This holds strong by 6725 by 2 points. All right. Go back to the 1-minute. All right. Okay. Stop was right here. Okay. Now stop loss gets moved to this high right here. Okay. We have a high that ran this high, and we have price drive down. There we go. And I was hoping for one more. I was thinking maybe a bump up just to rebalance this imbalance and then drive down, and price drives through my take profit. Okay. So stopped out, which ended up being fine because again, I had too much. This would have been too much for the eval. I would have to trade more. So this was okay. And then what do we see price do? Okay, we have the London desk is closing. All right. Again, this is an important range. 11:30 to 12. All the folks over in London are finishing up their day trading. Okay. And price now dances around this Friday low. Notice how this Friday fair value gap didn't get hit. When price gets so close to an area, doesn't tap it, and then makes a move, and there's no follow through, you can almost guarantee that it's because price wants to come up and move through this area. Okay. Because if it wanted this area as a rejection point, it would have hit it, right? Just like the new week opening gap. It wants this area as a rejection point. It's now building orders inside of it and not driving through. Okay, and if we just kind of take the top of this London range and we just kind of start to see like, what does price do at the top of this range? The first time it touches it, we get a wick and we get candles that drive up above 3 candles that drive down. So in relationship, these candles to these candles, this is a very good reaction. And then what happens? Very slow, slow drive back down. Taps it with a wick, massive candles back up. So this is a sensitive area, okay? We can see just by this that price is being sensitive to it. We also know that price likes to give a deeper move into an area before it reverses away from it, okay? And that's building liquidity and trying to get people on the opposite side of a trade. And so we have price kind of dive down below it. Now we got a candle body below, but then we got candles that go back up. Completely covers this one, comes back up. Tries to drive higher, up, higher, and then boom, up. Okay. So here's our deep dive. Just throw a little box on here. Okay. Candle bodies are holding within here, and then we start coming up out of this area. Now we start closing above here, and we actually start moving away. Friday low now is holding price above it. Price doesn't want to come back down in here. Okay. And just look at every single candle that touches this as we're reading price action. This candle completely drives through here. Let's go back and look. Okay. Friday high, because I want to show you how to read price action around levels. This Friday high, just look at how this is. Anytime we got a big candle, it immediately closed right below, back into it. Okay, so it's working this area to build orders. Shows a reaction off of it, doesn't touch it, stays down here, but we're not, no follow through. Okay, kind of 4 candles just to get above it, but not really moving up. Okay, closes below one more time. This is the first candle that we get where it actually drives through, bigger than any other candle that's driven through this level, and this is the candle you get right after it, a very weak down close candle. This signature around this level looks good for me to start taking longs. Okay. What do we have back here? We have a very long wick. Okay. These long wicks with small bodies are just, to me, they're just areas where price is going to get, is setting that up to run it again. And what ends up happening, we get into this Friday fair value gap. And guess, look what we do. We start consolidating again, waiting for Monday open. Okay. So there you have the thesis behind the short, where I wanted to see price move to. It didn't quite get down to this, all these equal lows down here. And we looked at that on the 5 minute. It did take out the one up close candle wick, which was this one right here. So if we look at the time, 9:44, here starts the next 5 candle, 9:45. And that's just a good lesson on checking multiple time frames to um, see. And there was a 5 minute fair value gap here. I thought that was a pretty fair area for price to tag. And it just didn't do it. Oh well, that's going to happen. If we're managing our stops and our ads correctly, then yeah, maybe we lose out on a little bit, but or maybe we start taking some off down here. Either way, those kind of trades are going to happen. All right. I got about 10 more minutes for anyone that has any questions regarding the daily levels. This was Fridays. Again, I grouped them over here in the object tree. Okay, Fridays, we're locking them all. We're closing. And then I would open up Monday levels. And then I just like to take a look at the lower time frame. 1 minute, not as much, just because 1 minute can be a little finicky. I like to look at the 5 minute structure and say, well, what needs possible rebalancing on the 5? Where could we possibly get to? Okay, so if I'm looking at this on the 5 minute, it's a little messy because there's a lot of like areas that could get rebalanced on a lower time frame. However, we're kind of looking like we're in a buy model off the NWOG, right? So we might not get big retracements down here. Okay, so again, if we kind of look at these, let's take a GAM box and all right, so this pretty much tapped the 50%. This low to this high, we got a 50% tap. So this area might be safe. Let me go to the next range. Okay, right at 50% here, we have the mean threshold of a Monday. We have a new day opening gap. Could we get down to there? Maybe, but we also have a lot of overlap in here. So really the only like unbalanced area as this kind of rebalanced up to here, and this is kind of rebalanced here, is maybe running these lows. Otherwise, maybe we could see a movement down like into this fair value gap. But depends on how much price is in a hurry and how much it's gonna stay in the area. Yeah, we use the prior days, and they're just levels like I marked out this, like I showed you Friday. Like I'm marking out Friday levels, just opens, highs, lows, and if it's like a big candle, like the mean threshold, or if it's a really long wick, the CE of that wick. And you saw on Friday how price reacted around on the 1 minute. I have multiple Mondays. So let's go to the daily chart again. Okay. Look at how far back I'm going. Monday's coming up, a week back, 2 weeks back, 3 weeks back, 4 weeks back, a month back. And part of back testing this is you white out the other days. So you don't look at any other day but the day you're currently on. And if you were to look at, some of these things, you see where like price can be reactive. So like this close, the close of this Monday was basically the open of this Monday. All right. And now all-time highs, obviously there's not going to be a lot of data to go off of because we're at all-time highs, right? So then the 4 hour becomes a little more important because now I can work this same system but off the 4 hour chart. Okay, but the more we stay in a range, okay, the more it gets really nice. Like here's all these markups from previous ranges. So previous lows, like this Monday right here, basically almost tags the low of this Monday, runs the high of it, and then we get into the basically the 50% of this wick. So basically up into this low. So if I was just looking at these Mondays and I had this low marked out, I say, well, this high and this low basically became the same area. Let's unlock this. Like if we're on like this high and this low like almost touched. It was a draw. Okay, so whatever structure was up here, it manipulates and then it draws to a previous Monday high, almost tags it. And you can get super specific like this where you measure 50% levels of wicks. And when you do that, you just get possible more precision entries. So we have price drives down, drives back up. We're looking for maybe a retracement. And so we have this level and price just manipulates into this level and then comes back down and almost gets the low of this. No, it's not overwhelming because again, like I'm just reading price action around the levels and I'm looking at like what does the daily or the higher time frame look like it wants to do, right? So again, because we rejected this fair value gap like 3 times and made no move, like massive move down, like we've seen what happens when we reject a fair value gap, right? Or like an order block, and price wants to use it as a level to move away from, you get really good reaction out of it. Let's throw these back on just for the structure. But this gives you at least the ability to kind of look at just the days that you want to highlight. Okay, here's another good example. Here's a fair value gap, right? And look what happens. We reject, no follow through. We come back down again, we reject, no follow through. These candles aren't driving up. What happens? Oh, let's look at this Thursday low. That was 2 weeks back. Thursday manipulates into a Thursday fair value gap. Let's look at this little inverse fair value gap on a Thursday. Oh wow, Thursday, let's see, up, down, open, manipulate into a Thursday fair value gap, drive up into a Thursday low. Like when you see that and you're like, okay, price hasn't like, you're expecting price to move up based off of like it's came back down here and bounced and you want to see it move up. Now the Friday, this was kind of like a tricky candle because possibly want to see more movement up, but however it decides to run all these lows down here. Okay, just kind of a tricky movement in price action where it's still in the same range and failed to drive higher. But look at this Thursday. You could have capitalized big time. You mark out these levels, okay? And you can go back here if you want. And here's your 50% mark of this, okay? That's right above the fair value gap. So you don't need to mark it, but it's there for confluence as this 50% level is basically the close of this Thursday. Like, look at that. It pretty much closes at 50% of this Thursday candle body. So if you got long here, where would be your targets? Well, my target for that Thursday candle would be, okay, well, if this is the Thursday high and we have a previous day high right here, well, this is going to get ran for sure. Where's my next one? A Thursday close, what does that match up with? Well, that matches up with almost filling in this fair value gap, so that's probably going to get ran. Where's my next one? We got 50% of this big wick. This is about 50% right here. Okay. And then what does it tag though? But it tags the Thursday low. That's a lot of points you can capture by just using these levels. See, when it works out real nicely, it's like everything with trading. It's not always going to be A plus setups every single time with every theory. It never happens. We all know that. But when it does, how would it feel to capture this full candle for the day on one of your funded accounts? How many points is that? Let's see. Let's see. We get in at the top of the fair value gap up to that low. 288 points. That's a lot of points. That's a great day. And you can take partials along the way, or you can look at how price reacts around it. That's what I did for Tuesday. Tuesday I captured this full candle, 529 points on this candle. We can just Tuesday levels. Here's a Tuesday high. What does price do? It manipulates up into the fair value gap, runs this Tuesday high, and it comes all the way into the new week opening gap, running this Tuesday low. And we had a, what do we have below this Tuesday low? We had a wickless candle. That was my target. So I literally got in up here and left the trade on till this wickless target. Okay. Thursday low, Thursday high, pretty much right there. What does this high say? 180. What is the high of this? 179.75. So it was one tick away from touching this high. What Thursday reach for down here? Oh, another Thursday fair value gap. Oh, just taps the Thursday inverse fair value gap. And we get all the way up into this Thursday low. All right. So Yeah, CE is just basically 50% of a wick, and mean threshold is 50% of the body. So just 50% of things, right? Like that's kind of a something that gets taught in trading, 50% levels. Like I show you on the 1 minute ranges, oh, it taps 50%, then it keeps moving in the direction. Like 50% is the difference between premium and discount. It's right there. So if it just taps into premium and continues lower, it's moving towards discount. So 50% of things are fair levels to look at. All right. Yeah. Yeah, if you want to get into the ICT lingo, that's just ICT lingo. Mean threshold for bodies, CE for wicks. 50% of that. You go over here to your object tree and you build a folder. So I have a folder that says Monday levels. It's locked. I open it up and it has all the Monday levels I've ever drawn in case I need to look at those areas of price. And as I draw and as price makes new Mondays, I add more levels. And some of them I might not even need to use. Who knows? Price might not get up here. It might not get down here. We'll see what happens. Here's a previous Monday. Close, previous Monday high. Okay, I could add these levels in there. So let's say if I'm going to add a level. If I'm going to add this previous Monday high. Okay, we're going to make it the color of the candle that I chose. So it's black lines with the black candle. We're going to go, it's 965 is the high. Boom, we got that. Okay. Um, Monday high. Okay, it pops up over here. Monday high. I'm going to move this into my Monday levels folder. Boom. Relock it. It's locked in there. Now I can hide it when I don't want to look at it. If you want to do something super Gucci, okay, let's say I want to look at it on the daily and I only want them to pop up on the 5 minute, okay? Because when I want to go to my 4 hour, I don't want to see all this on the 4 hour. So on the 5 minute, you have the 5 minute chart selected. You have this selected. And hold on, Monday levels, go down here. This is all your Monday levels locked. 3 dots, visibility on intervals, current interval and below. Okay. It takes it off your daily, but if you already have marked it out and you don't need to like see all the levels like on the daily because you're watching reactions on a lower time frame, now they just show up on the 5 minute, 1 minute. Oh, 15 minute, they're gone. 1 hour, they're gone. I'm looking at 1 hour structure. I don't need to see all those levels. 4 hour, I'm looking at 4 hour structure. Don't need to see all those levels, but I want to see reactions on the lower time frame. Okay. Click Monday levels again. Go here. Visibility at intervals, all intervals. Okay, now we got it on all once again. And then you can do it for 4 hour too. 2 p.m., 6 o'clock, or this should say 2 o'clock, not 2 p.m. So if you're doing 4 hour time theory, which is the same exact theory, just uh, 3 pairs, you have all your 2 o'clock, 6 o'clock, 10 o'clock levels. And I'm no wizard, man. I've just put in hours and hours of studying time. I'm literally I'm a blue collar worker, bro. I'm a fireman. I work with my hands. That's it. All the stuff that I've learned from this is because I love it and I want to be able to make money in another fashion than working 24-hour shifts at the firehouse. I love my job. Yeah, I work for the fire department, so I love it. I love going into work. I love the people I work with. I love the job I do. Um, but I work in a very busy area, so it's like last night I got 2 hours of sleep, and then I come home and I got my daughter has soccer and birthday party and stuff I got to do around the house and do this kind of stuff. So it'd be nice to be able to make money in the market versus working a 24-hour shift, extra 24-hour shifts where I'm, lack of sleep, beating my body up, you know. So I want to go into retirement very healthy. And this is, to me, trading is the avenue to be able to make money that's not like you don't physically beat yourself up to make money in the market, but you do have to put in the time to study and learn it, which is like anything. All right, I got to get going. Um, Again, we'll do more of these. I have no problems talking about this stuff. I love talking about it. I think it's great. We've all been we've all been there where we're new in something. Okay, I'm still new in a lot of things. I think doing like group sessions and talking and Q&As and going over stuff is helpful. Uh, it's how I got to where I'm at. You know what I mean? It's it's just the way we all learn, right? Like we learn from somebody at some point. So yeah, this is recorded. I'll post it, and we'll keep doing more of these. If so, hopefully it's helpful. Hopefully you guys enjoyed it, got a little something out of it. All right, we'll check you guys later. You guys have a good evening.